If you want to know when the housing market is going to crash, there are two things that you have to look out for in order to know which direction the market is heading. And most importantly, it'll be able to tell you exactly when it's going to pull back. What's going on, everyone? My name is John Lee, and welcome to my channel where we talk all things money, real estate, and entrepreneurship. If you haven't subscribed already, don't forget to, so you can be up to date with my latest video. Now, going into 2022, we had a very strong end to the year of 2021. Market-breaking prices, market-breaking homes sold, and we're setting new records. And we're actually starting 2022 off on the same note. And all the experts are speculating that the housing market is gonna rise into 2022. And this is exactly why I'm making this video right now, because I am seeing some trends that are going on that are making me a little bit worried, and I want to address those to you right away to protect you. Okay, so the first thing I want to talk about here is speculation. So this normally happens at the end of every run-up, right? We can see this across the board with different types of investment assets, such as stocks, such as cryptos. When you see there's like a station going up, and then you see that little bit of a through the roof kind of crazy increase in value, that little pump at the end. At the end of that pump is when they start to dump. That's what we're kind of seeing like in today's market. It's kind of scary because everyone is speculating, and there's extreme speculation market because people are buying properties for sole purpose of making money fast. For example, you're buying a home to flip it the next week to make easy $50,000, $100,000, and now when you're hearing about your Aunt May or your cousin Joe, who's been able to make a quick buck just by flipping contracts of a home purchase, then it gets a lot of people giddy. It gets a lot of people thinking, and they might not necessarily buy a home for the right reasons, because they want to make money fast. Now, these days, people are actually buying properties to live in because they believe in the long-term appreciation of assets. And quite frankly, there's a lot of home sellers that have sold their home who have to buy, right? And not only that, they're competing against first-time home buyers who are trying to get their foot in the door to a property as well. And also they're competing with investors who want to get into a property that cash flows and where they can tenant and build out long-term generational wealth. So all these factors considered, there's a lot of people that are just constantly getting outbid in the market right now because they're not in the right mindset to buy the property to make a quick buck, but they want to buy it to have a place to live. And another thing to look out for too is imbalance of supply and demand. And that's kind of why we're seeing a ridiculous amount of multiple offers currently in the market. We're looking at 10 offers to 30 offers on the properties that are selling $300,000, $400,000 above asking, subject free. Man, it's crazy out there. And these days, the supply home is extremely limited. I mean, not only because we're in a very low season of real estate market, primarily we're in the winter right now still. Spring is creeping up, but we're still in winter. And unfortunately, the rate of supply that is getting put out on the market is unlikely to go up until spring, that's what we're hoping, or until a couple of years, because right now, home sellers are hesitant to sell because if they do end up selling the property, yes, they sell it for higher, but there's a really high chance that they're end up buying the property they want to buy for an even higher premium as well. And so there's a lot of hesitancy, even with my own clients right now, that they're saying, John, we don't really want to do anything because we're not too sure where the market is going. So for that reason, there's even less inventory on the market, and for the sellers that sold, they need to buy a place, and first-time homebuyers are trying to get in because they're looking at prices constantly climb up. Investors want to kind of lock in that a second, third, fourth rental property as well, so they can start cash flowing it and make a quick buck on it. The fact is, even with the amount of new properties that are being built on the market, there's just no way that the amount of property that are being built and the amount of resale properties available in the market will be able to keep up with the demand fast enough, because the approval process takes an extremely long time to get things through the city to get it approved, right? And another factor that we're running into too is the ever increasing interest rates. And we've already seen interest rates rise as we're going into 2022. In 2021, towards the end of 2021, Q3, Q4, interest rates were around 1.1 if you're very lucky, which is rate that I got mine locked in that, but the average rate is around 1.35, 1.45, which is a solid rate. Now, the average market rates that we're looking at are close to 1.95, 2. We're kind of starting to see interest rate creep back to over 2%, and that's considered average normal on the market. There are some exceptions where if you're buying a property under $1 million, you can get interest rates around 1% as well. But when we see interest rates rise and we continuously would see interest rates hike, we expect it to go up this year. It's going to drop the demand of the home purchase, much like we saw in 2007, 2008. When the demand drops and there's more supply on the market than demand, then everybody is speculating that the real estate market is going to crash, which caused the prices of homes to actually go up, which then ultimately caused the market crash, right? Because with the amount of demand on the market and supply on the market and people's emotions playing into that, pumping it up a little bit higher, and then all of a sudden people get scared about buying because with the constant increase of interest rates, they're paying more mortgage, they can't seem to justify, or they're scared of not being able to make their mortgage payments. And so when demand just shrinks, all of a sudden sellers are put in a position where they need to sell and there's no buyers buying it, so they drop the price, and that's how you kind of slowly tank the whole market, right? Because now the next buyer is going to be like, well, I got a good deal. The last buyer got a good deal on this one. Well, I want to get a better deal on this one. And then the sellers are forced to be in a position where it's like they have to sell if they're looking to relocate or move, or to kind of sell off part of their investment profile. So when people say, I'm waiting for the next crash to make money, what they really don't understand is that it would actually be the complete opposite of what happened, because of the different rules and regulations set. So extreme speculation plus supply and demand imbalance equals a major pullback in the market. So when you see a 10, 15, 20% drop, that's when the pullback is happening, and it's actually beneficial to the economy rather than harmful. And that's kind of why we've seen home prices continue to rise, even with COVID, with all of these factors involved. And even going into 2022, experts are speculating that home prices will continue to rise even further. So, as I mentioned before, nothing rises in a straight line, right? If you look at any sort of assets with a kind of time chart to it, stocks, crypto, charts of real estate prices over a long period of time, they usually go up, they go down, up, down. So it's like really formed with peaks and valleys and bumps, as most people would say. And over time, these bumps kind of even out because properties do continue to appreciate generally over a long period of time. But in the short run, the bumps are definitely more prominent. When you zoom out, the bumps actually aren't that big of a deal. So 2 things that you have to look at for. Number 1, again, is the amount of mindset, the amount of extreme speculation, the public opinion, and how they approach real estate. Are they looking to flip it for a quick buck? Are they investing in it for the long run and holding on to it, knowing that it'll appreciate? Second thing that you kind of want to look into is the supply and demand and how that affects the housing market And last but not least, we want to factor in interest rates as well, and how interest rates play into people's emotions and people's decision making process as well. So hopefully that gives you a better idea of what the metrics are to look out for, and personally what my opinion of the real estate market is, and why experts are expecting home prices to continue to rise well into 2022. Again, this is just my personal opinion, but it's really important that you take these metrics and you do your own due diligence and do your own research, because at the end of the day, no one has a crystal ball. Whether the market goes up or goes down, honestly, no one knows what the future holds. But with the right tools that you have in your arsenal, you are able to make a better informed decision compared to the next buyer or the next seller on the market. And hopefully that will put you in a better spot to make the right choice. So with that being said, I'm curious to hear your thoughts on what you think will happen with the real estate market in 2022. Comment down below what you think the real estate will happen. Will it continue to skyrocket and break record prices, or will it continue to correct and crash? And if you haven't already, please do me a big favor. If you found value in this content, just give it a nice thumbs up and subscribe to my channel for further future awesome content like this. And don't forget to follow me on all my social media channels as well. I appreciate all of you guys for watching to the very end, and take care.